Andrew, I don't know where to put my stop loss. Can you please help me? If that sounds like you, listen up. I've got some great information for you. Let's get into it right now. Hey there traders, it's Andrew Mitchem here with video and podcast number 545. Now, I don't know where to place my stop loss. It's a question and a comment that I get all of the time. And it must be something that frustrates so many people because they just don't know where to put their stop loss, why to put it at a certain level. And so it creates confusion, frustration, and it inevitably leads to losing trades and therefore overall a losing trading performance. Now, unfortunately, most people out there just don't know where to put their stop loss because they don't understand the market or they don't understand what's happening at that time. They don't realize there's a difference between different currency pairs in terms of the amount of movement or different time frame charts or different times of the day, volatility at the time. All these things make a big difference, and it's something that you need to consider when placing your stop loss. Now, unfortunately, most people are out there who learn to trade through, let's say, watching some YouTube videos or a few forum sites. They unfortunately make the common mistake of putting their stop loss X number of pips away from the entry price. Why they do that? Well, that's what most people tell you you should do. It makes it easy, I suppose. You go, oh, I'm putting this stop loss at 20 pips away. Well, what on earth does 20 pips mean? It's completely and utterly irrelevant. 20 pips if you're trading the Euro franc is massively different to 20 pips if you're trading the Euro New Zealand dollar. As an example, one doesn't move hardly anything, daily range of maybe, 40 pips. The other one moves a lot, average daily range of 100, 150, 200 pips. It's vastly different. It also depends on what time frame you're trading, what time frame chart you're trading, because that will determine how big a movement is likely to happen at that time in the next time frame candle. Because sometimes the market's very quiet, other times it's moving a lot. Obviously, if you're trading on, let's say, a 4-hour or 6, 8, 12-hour daily, it's going to be a lot bigger candle than if you're trading on a 15-minute chart, for example. And so you have to take this into account also. Now, you also need to take into account, and things like we do, is support and resistance levels, a pivot point, previous swing highs, swing lows, and making sure you're using as many factors as you can to put your stop loss behind that level. So if you're taking a buy trade, for example, you want to put your stop loss below several factors of safety to give yourself the best chance that the market may fall back towards your stop loss, but it's not going to take you out, and then it changes and goes up into your anticipated direction and you get a profitable trade. Another thing that we use, and you'd have heard me talking about this multiple times, a thing called RAND numbers. Now, a RAND number to me is a level that ends in 50 or especially 00. That is a very strong psychological level. Have a look at your charts. You will find that the price bounces at those levels just so often, it's not funny. So if you happen to have a trade that has a stop loss that you can put on a buy trade again below one of those RAND numbers, then even better, because the likelihood is the price may come back towards that RAND number, test that level, and then move up. Keeping your stop loss below that level, that RAND number, adds another factor, another layer of safety to your trade, and another layer of probability that the market will not come down and stop you out. And how often do you see trades that you go to look at them in hindsight and they just stop you out and then they change and hit your profit target a few bars later? How frustrating is that? And I'm sure you've experienced lots of occasions when that happens. So once you have your stop loss area in place, or the level you need, you then need to calculate, this is the only time you really need to use pips, how far away that is from your entry price, whether you're using a market order or a stop order or a limit order. How far away is that stop loss from the price that you are entering the market? Therefore, you then need to know that number, because therefore you can then go, well, and I've got a lot size calculator script that does it simply. You then work out the lot size or the position size you need for that trade according to the stop loss of that trade. And it's also according to a few other things. One, it's the pair that you're trading, because of course different pairs pay different amounts per pip of movement. It also is determining by your account size and the denomination of your account. If your account's in British pounds, it's going to be a different number than if your account's in New Zealand dollars or US dollars, for example. So you've got to know all that in order to calculate your risk size. Now, all that sounds potentially a little bit complicated and confusing, and you go, oh, that's just too hard, Andrew. No, not at all. It's simple, and it just takes literally like a few seconds to drag the script on. I'll put a link to it, by the way, so if you don't have it, you can use it on MT4, MT5. You literally drag the script on. My script knows what your account size is, what your denomination is. You're dragging it onto the chart that you're about to trade, so it knows what pair you're trading. All you literally do is say, this is the risk I want, half of 1% or quarter or 2%, whatever it is you want to risk. This is the stop loss size. It will tell you the exact lot size needed. Really, really simple way of keeping all your losses low and controlled and equal. So understanding stop losses, where to put them, why to put them, is crucially important for your trading success. Now, a couple other things out there. If you have not been on my masterclass, I really encourage you to do so. It's a 1 hour long masterclass. It just goes through all the different things that we look at as traders and how we can help you. If you've not been on my prop firm masterclass, that is also something. If you're out there looking at prop firms and you want to know how to pass prop firms easier, then you can look at that. Again, I'll put a link. If you are out there looking for a fantastic broker to deal with, this is for pretty much everybody apart from a few countries and the US, but for everybody else, have a look at Blueberry Markets. Great brokerage, great platform, great people, lots and lots of markets, especially on their MT5 platform. And again, I'll put a link to Blueberry Markets here as well. So I hope that helps. Understanding stop losses are massively important. I look forward to bringing you more trading tips and information this time next week. If you're on YouTube, like and subscribe, or feel free to share the video. And if you ever have any topics or questions for me, please feel free to email me directly, and I read everything that I get sent to me. Andrew@theforextradingcoach.com. See you next week. Bye for now.